The Vanguard Effect. Lower costs, more value for investors. Since 1975, Vanguard have continually brought down costs massively for us as investors. Vanguard probably are the best thing that has ever happened in the investing world for a low-cost index fund investor like myself. Even the investing GOAT, as you can see, recognize this. And this Vanguard Effect isn't slowing down. Other firms have followed suit. Costs keep coming down for us, but unfortunately, this doesn't seem to apply to Vanguard UK anymore. When it came to investing for years, Vanguard were the cheapest option, and they still are in general in the US. But that can't be said in the UK for Vanguard UK anymore across their platform and funds. In this video, we're going to go through the current state of Vanguard in the UK, and you can decide whether to use their platform, their funds, or neither. So let's get into it. As a very quick bit of history, although indexing came around in the 1960s, Vanguard and Jack Bogle created the very first index fund in 1976. And over the decades that followed, Vanguard really brought low-cost index investing mainstream. For years, Vanguard was arguably one of the default recommendations for UK investors. Their funds came to the UK in 2009 and their platform in 2017. They arguably disrupted the UK market with their low-fee index funds and a low-fee platform. Low cost, simple, no thrills. But in 2026, the landscape is different. And now, to be honest, they are the ones being disrupted. First, let's talk about their fund fees. Vanguard only offer Vanguard mutual funds and ETFs on their platform. This isn't the worst thing, but it does make their investment offering limited, especially compared to competitors. Speaking of those competitors, you can actually invest in Vanguard funds for cheaper by using these other lower cost platforms who charge no platform fees, as we'll come on to shortly. Not just this, perhaps what was very bizarre at one point, and you might remember this if you've been investing for a while, for quite a while, there were instances where Vanguard's own funds were available on other UK brokers, but not on Vanguard's platform. VUAG was one example, VWRP was another. It seemed to be the accumulation version of the funds, although of course these ETFs are now available on Vanguard UK, so this doesn't seem to be the case anymore, but I thought I'd just point that out. The bigger point to make here though, on the fund fees, and perhaps the most damning, is that Vanguard UK generally don't have the cheapest funds anymore. As you can see in this tool I created for the S&P 500, for the FTSE 100, or for global funds. It's rare they're the lowest fee, and in some cases they're actually quite far from being the lowest fee. This means that we as investors in the UK pay more to invest using Vanguard funds. Although this is annoying for us in the UK, what makes this even more annoying is that in the US, Vanguard are still a very cheap option. Their S&P 500 fund is over 50% cheaper, VOO. VT, a very diversified global fund, even more diversified than the FTSE Global All Cap, has an insanely low fee for that amount of diversification. Although I don't have a Vanguard US account, Vanguard US seems to offer a lot more funds and even individual stocks. Now, you probably don't need all of these investment options, but to come back to fees, Vanguard US have actually made record fee cuts over the last couple of years, providing even more value and fee savings to US investors, and this has ultimately kept Vanguard US very competitive in the US market. It makes sense, their US market is their biggest and most important market, and whilst Vanguard UK have given us some fee cuts, unfortunately the full effects of this haven't really translated to this side of the pond. Even with their recent fee cuts over the last couple of years to some bond funds, to some stock funds, as I mentioned before, it's rare to find Vanguard being the lowest cost fee provider for any given index, particularly when it comes to stock market indexes. More damning though is platform fees. Changes made in early 2025 mean that Vanguard, unfortunately, are no longer a viable option from a fee perspective when it comes to investors starting with a small sum of money. I myself started investing with Vanguard, and I invested £100 a month when I got started, paying a platform fee of 0.15%. However, with the recent changes, you will now pay a minimum platform fee of £48 per year. That's £4 per month if you have less than £32,000 invested on Vanguard's platform across their stocks and shares ISA, SIP, and general investment account. Now, £48 doesn't sound like a lot, but this massively negatively impacts those just starting out or those with smaller portfolios. To give an example, probably best illustrated through numbers, if you're just starting out with £100 per month, like I did many, many years ago back in 2018, then that's a 4% monthly platform fee that you're paying on your contribution. Even if you have a £5,000 portfolio, that's nearly a 1% fee per year, which is very high. It isn't until you get to the £20,000-ish mark where your relative platform fee starts to come down to a more reasonable level, but it's still at £20,000 invested across those accounts, 0.24%. And this platform fee can of course be completely avoided by using a zero cost broker. There is a fee cap of £375. However, when it comes to investing into ETFs, the other legacy or full feature brokers are still likely to work out cheaper, as you can see on screen, due to their much smaller fee caps. Although it is worth saying, for mutual funds, Vanguard are still a good option when it comes to these full feature DIY platforms. But to summarize this platform fee point, this means for those starting out, you will likely pay high relative fees using Vanguard's platform. And even for larger investors, depending on what you're investing into, you might still be able to invest cheaper by using another platform. The irony, Vanguard is losing on its own philosophy in the UK anyway. Before all these zero commission brokers came in and became popular, Vanguard were still a very cheap option. However, not anymore. Fund fees are relatively high, platform fees are relatively high. It's not sounding too good, I know. It is worth saying their junior ISA is still competitive. This didn't change with the recent fee structure change. It was only the adult accounts that changed. And although there are still cheaper junior ISAs out there, such as HL and Free Trade at the time of recording, their junior ISA is still a pretty cheap option and a good option. Now, I know this video has been a bit doom and gloomy so far. I mean, I actually still use Vanguard myself. But before coming on to the pros, let's quickly rattle through a few more limitations of Vanguard UK's operation. There's no fractional investing, which means you might need to save up for a while to buy one unit in an ETF. And it means if you have an automatic investment into an ETF, it might be cash that just sits in your investment account and you need to invest it manually. A lot of other platforms do offer fractional investing. If you do invest live into an ETF, it will cost you £7.50. Now, this can be avoided once again by just regularly investing and setting up a regular invest, but a lot of other platforms do not charge anything to buy and sell. There's no pie feature like a lot of platforms now offer, and I actually do quite like that feature myself on other platforms, and their app/user experience is still very basic, which, to be honest with you, as a simple passive investor myself, I don't really mind, but their app is very much in the stone age, especially when you compare it once again to some of their competitors. Now, despite what you just sat through, it's not all negative, and to be honest with you, I do have an affinity towards them, just given what they have done for investors over the decades. So what have they got right? Firstly, it's worth pointing out they're one of the biggest asset managers in the world, the second largest in terms of total global assets under management, which means they've got a very long track record and they are still one of the best brand names out there, even in the UK. I think safety is a big thing when it comes to investing, and Vanguard really are as big, safe and reputable as it comes. Even though all the other popular brokers in the UK are FCA regulated, I get this feeling that when people use a new techie app, they don't assume it to be as safe. Whereas with Vanguard, because of their size, reputation and track record, safety naturally comes with it. They are still very transparent with their fees. You can find them all online by searching up this and see every fee you will pay. I've always loved how they've always been very transparent with their fees. There's good customer support. You can call them up and speak to a human directly. That is something that's often not offered when it comes to these low-cost DIY brokers. You often need to send them an email or speak to them in the app. I still use Vanguard SIP, and they do allow limited company contributions. One limitation right now of the low-cost DIY brokers is that none of them allow limited company contributions. They also offer mutual funds, and a good range of mutual funds, including the FTSE Global All Cap, target date retirement funds, and life strategy funds. Once again, a lot of other low-cost DIY brokers don't offer any of these. And they have a good and largely complete offering. They have a stocks and shares ISA, a SIP, and a general investment account, being the key accounts. They have a good investment range across those mutual funds I just mentioned, and all their other popular ETFs, such as the S&P 500 and the FTSE All World. Maybe quite scenic, as you've noticed the lighting change throughout this video as the sun is setting. Is Vanguard actually in decline? I would say not necessarily. They're still a massive UK platform and will always be very popular, particularly with certain type of investors. But they are not the automatic best choice anymore, both for their funds and their platform, and that is especially the case for cost-conscious investors. In their defense, as I mentioned earlier on, they have been trying to cut fees and introduce new funds, expand their offering, but it probably isn't enough, and they probably do still need to do more. Saying that, their customer base and the sort of certain type of investor I just mentioned is very sticky, and that's myself included. I still contribute to my Vanguard SIP. I think investing particularly, trust, safety, and reputation goes a long way, and Vanguard still give that over fee optimization. So that is the current state of Vanguard, specifically Vanguard UK. Let me know what you make of all of this in the comments below. I've tried to be as unbiased as possible in this video. I actually do like Vanguard. They really got me started investing properly back in 2018, and I still use their Vanguard SIP. But unfortunately, and what's probably come across in this video, from a fee perspective, both platform fees and fund fees, they're just no longer the lowest fee option. And in fact, they're actually quite away from it. Given all of that and biases aside, I've tried to do my best in this video to give a fair update on where Vanguard UK currently is. I also mentioned Vanguard US in this video. A lot of things that UK investors get wrong is listening to US investors. So click this video here next, and if you're based in the UK, you will know exactly why you need to stop listening to US investors.